Interest rates are higher than Snoop Dogg in space. The housing market has transformed from the temperature of your wife's shower to 6ix9ine's career after snitching. To be honest, he's made more money than I could ever imagine, so I guess the joke is really on me. Home prices may plunge lower than Zab Judah's low blow to Floyd Mayweather's
balls.
But despite all that, homeowners still in the market should have less stress shopping than Biden in ensuring America's commitment to Israel's self-defense.
And so this includes we're committed to unwavering commitment to your self-defense.
Or better yet, less stress than Trump's comb-over on a windy day. There, I beat them both up so you political nuts can stay off my back. All that to say this, the housing market is still far from normal and there is still a lot of uncertainty. What's up, everybody? I'm Sean McMurray, co-host of BPM RIA Online, and this is Mr. $250 Million in Real Estate Transactions, my mentor, my good friend, president and owner of BPM RIA, Anish Dave.
Hey, this is Anish Dave, CEO of BPM RIA. Thanks for watching another one of our great episodes.
To say the housing market is normal would be like working your entire life to one day be free to enjoy the things you no longer can enjoy.
Oh, yeah, that makes sense.
We have 5 years of data that reflect how major events have affected the U.S. real estate market and Gandalfed its growth.
You shall not pass!
Although no one really knows what will happen, here's what economists and real estate experts think in 2022, normal or not. 1. The variation between markets. The housing market is still on fire. Well, it depends on which market you're in, but things have cooled since summer. According to real estate listings tracker Redfin, August home prices were up 6.9% year over year compared to the same month last year, with a median home price of $406,000. The number of homes sold was down 18.4%. What do you think about this, Anish? As investors, blessing, curse, or neither?
Yes, Sean, so I'm pretty excited. I know it sounds kind of funny, even though sales may have gone down, but on the investor side, we're getting rid of a lot of competition. So if you know what you're doing and you know how to evaluate and really find those off-market deals, you're still winning like we are.
Number 2, what you should know about rising mortgage rates. Unlike the Emmys ratings, mortgage rates have doubled since the beginning of the year, surpassing 6% in September, which is ironic with our 200 to 300 views max on our videos. Anyways, I believe almost all experts believe they will continue to rise. The average rate for a 30-year fixed-rate loan sits at right below 7%. Realtor.com chief economist Danielle Hill in a recent Fed meeting had this to say. Mortgage rates are climbing with renewed urgency following the recent Fed meeting in which Chair Jerome Powell made it clear that fighting inflation is the first priority for the Fed. The funny thing is, I've been exploring options for financing a new build that we are planning, and I'm starting to see adjustable rate mortgages being suggested and discussed more and more as interest rates increase. Anish, I think we all can agree that rates will continue to rise, but should investors consider adjustable rate mortgages in hopes of riding out the higher rates until they hopefully fall again?
Yeah, Sean, it's always a good option to look at adjustable rates or adjustable ARMs, maybe a 2-year or a 5-year. Depends on what your exit strategy is, right? If you're rehabbing the houses, it really doesn't matter because it should be a short-term loan. So it doesn't really matter if it's 8%, 10%, 6%. You should have enough profit margin that the rates shouldn't really make a big difference. If you're looking to hold on to it for a little bit longer, that might be the perfect move, is maybe a 3-year fix or a 5-year fix and take advantage of the adjustable rates out there to get better cash on cash.
Before we move on, make sure you like, share, and subscribe to our channel and hit that notification bell to receive updates whenever we post a new video. Number 3, buyers will have a less stressful shopping experience. Although affordability remains one of the forefront challenges affecting home buyers, this actually can be a blessing in disguise for those able to take advantage. Jeff Tucker, senior economist at Zillow, expects further small price declines through October. Inventory is sitting just below its August peak, and listings are taking longer to go pending. Taken together, that all means it's a better time to buy for those still in the market. Buyers will have a less stressful experience than they've had over the last couple of years, says Tucker. What does Tucker mean when he says a less stressful buying experience?
Well, since interest rates have gone up and now there's more listings coming out there, what's happening is you're not having a bidding war like we were seeing in the last year or two. Also, if you really do well and you have a good agent, sellers are getting more motivated. They're giving discounts or points or seller credits so you could get a better rate to buy down on your mortgage. So there's a lot of moving parts. If anything, it's a good thing for buyers looking to get their first home.
Number 4, there may be continued deceleration of home prices. As the U.S. economy continues to recover from the Great Recession, there may be a continued deceleration of home prices. Nadia Evangelo had this to say: home prices have increased yearly by less than double-digit for 2 months. With rising mortgage rates hurting affordability, price gains will continue to slow, likely 5% by year-end. Greg McBride, chief financial analyst at Bankrate, believes that asking prices and eventually the sale prices of homes will come down as the housing market slows and mortgage rates continue to decrease. Daniel Hale's guidance seems to be in line with Greg McBride, as she expects housing prices to continue to moderate and are declining month to month. This is true for both the median list price and the median sales price. According to the most recent data, the median listing price continues to grow at a double-digit pace, while the median sales price registered just 7.7% growth. Although Hale expects housing prices to moderate, she stops short of predicting a plunge due to dwindling existing homeowners and fewer new homes for sale. Anish, will we continue to see home prices fall?
Yeah, Sean, I think there'll be still a little bit of a correction on pricing, and it really depends at what level of housing. Are you looking at houses over 500,000 or $1 million in our market? But you do have to remember, in our market, prices have gone up well over 30% in this past year. So a little correction is not that bad for us. If anything, if you're looking to buy that investment property and you use correct leverage, as long as you have cash flow out there, it won't really make a big difference. And smart investors are really, sitting with cash like we are, we're ready to pounce on some good deals.
In conclusion, home prices are still struggling to keep up with inflation, and there's a shortage of homes on the market. But that doesn't mean all is doom and gloom. Despite slow movement, there's little reason to believe that things won't level off in the next few years and start moving upward again. All you have to do is look at home price charts from 1965 to now. The overall trend is up. Anish, what say you for final words?
Yeah, so of course we're seeing a small correction, and those days of just throwing your property out there and bidding wars might be gone or softened a little bit. But people were buying properties because of FOMO, fear of missing out. They needed to get a house right away or else. Now there might not be big bidding wars, but if the house is priced right, it's gonna sell. So no crazy, hey, I'll just see if I put it at X amount and maybe some fool will buy it. Buyers are becoming a lot more smarter, and they're really looking at cash flow as investors too.
And we're out.